Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant, with me my colleagues Sonia and Mangalam. Guys, hi. So inching closer and, the roads are emptier, the office is looking a little thinner, and I think Nimish was telling us that brokerages and, dealing rooms are all not shut, but I mean, there is the lone man.
Someone was telling me that in Singapore and Hong Kong, there's no one to even publish reports. Forget about people writing reports or, coming on. There's no one to even publish them. So
they're outsourcing them to the staff in India right now. And you spoke about roads being empty. I wonder what roads you're taking. I mean, roads to office are definitely empty. Roads outside of the city, they're jam-packed. And roads to restaurants, roads to clubs, roads to hotels, and to the hills.
All full.
Mangalam is on the right roads. I'm definitely on the wrong ones. Let's just quickly start this with a quick setup in terms of how things are. It's easier today. There is no, US markets are shut. There are very limited global cues. US futures are up a little bit this morning in Asia. What is trading is not doing badly. Oil prices are up about 1.5%. So yes, nothing from overnight, but this morning there is a little bit in terms of cues which are there and which are largely positive. Now, the Nifty yesterday recouped 200 of the 300-point fall that we saw on Friday. So it was a very smart recovery after Friday's sharp, devastating fall. It was devastating to many. The point, though, is that after this, and we'll get to the F&O data with Mangalam in a bit from now in terms of how much of this was covering, etc. But I would say that, this one-time excessive move on Friday, not yesterday, but the one-time excessive move that we saw on Friday has been corrected with yesterday's bounce, right? It's like a one-time settlement. It just looked very excessive on Friday. I said that during market hours on Friday as well, and a lot of it has been reversed with yesterday's pullback. Now we I think, revert to a more normal kind of a market, hopefully, but with a bit of a positive bias nevertheless. So I think that's the broad kind of a way to look at this. Huge volatility, especially Thursday and Friday. Yesterday, a bit of a reversal on the other side. And now maybe not equilibrium, never equilibrium, but perhaps, more normalish kind of market. If you are trading long on the way up, there are a couple of levels to watch. The first is 18,140. And actually, there is only one. 18,140. It's actually 18,140, 18,150. These are two levels. One is, it's coinciding with a 38% retracement of the fall, which is the fall from the 14th of December high to yesterday's low, because yesterday the market made a fresh low below Friday's low. And then, of course, there was a sharp pullback. So the 38% retracement of this is 18,140. And 18,140, 18,150 is also the point on the rising trend line all the way from the lows of June. So this is the big one on the way up. It's not very far, by the way, from where the market closed yesterday. On the downside, you've got the Nifty 20-week moving average at 17,853. And then you've got the recent low, which is yesterday's low, which is, and it's largely same, 17,780, which is the low that we saw on Friday and approximately what we saw yesterday as well. The banks saw a ferocious pullback as well. Huge. Actually, if you look at the Bank Nifty in candles, Friday's candle, then Thursday's candle, and then you looked at yesterday. Yesterday's candle was so large that it kind of engulfed both the last 2 days of losses almost. The PSU Bank Index within that especially bounced even more ferociously, 7% on the PSU Bank Index after a 14% pullback that we saw all the way till Friday's close. So half of that 14% fall recouped in a single day. The Bank Nifty almost got to the 50% retracement of the same fall that we are highlighting, which is from the 14th of December high to the low yesterday, which is 42,860. I think we fell short by 20 points on the Bank Nifty at yesterday's high. So 42,860 on the upside is the first resistance to watch. After that, you kind of get to 43,165, etc., which are higher retracements, 50% retracement, etc. But the first one to take out is 42,860 on the way up. So hoping for a more normal, calmer, stable kind of market as we roll into the end of the year. Guys, hi.
Okay, well, let's see how that progresses, right? If you're hoping for normalcy, because we've only had volatility in the last many days, so keep your fingers crossed. But from the bull standpoint, today is not a bad day. The start will be in the green. The SGX Nifty is up almost about 60 odd points. The big question we're asking, the pullback that we saw yesterday, will it extend itself? Because it was purely short covering, what we saw in yesterday's trade. Delivery volumes were also on the lower side. The good part is that, of course, we don't have any cues from our global markets overnight. So most markets, not just the US, Singapore, UK, Hong Kong, were all shut yesterday. Brent is now back above $84 a barrel. So just keep that on your radar. It's a bit of a niggling worry. Russia had said that it could cut its output because of a price cap. So that's, on the margin, something to watch for. Overall, it's really a lot of money that's come through from the DIIs yesterday as well. DIIs bought about 1,300 crores and put together in the month of December, it's over 20,300 crores that domestic institutions have pumped into our own market. So in that sense, this 18,000 level was reclaimed. Both the 100 and the 200-day moving average were held for now. 100 DMA is 17,840, 200 DMA is 17,190. But the big question is that even if this support is held, will the market pullback really extend itself? Because yesterday was a lot of short covering, but let's see how today shapes up. Could be some volatility in store as well. What are you watching, Mangalam?
A lot of short covering indeed. You know, you guys were saying that there are not enough people in dealing rooms, etc., and not enough people to write reports. Yesterday's gross volumes were just 30% of the average gross volumes that we saw in December, which anyway is lower than all the other months of the year. So, 70% reduction in gross volumes in the cash market. So the rally was fueled by short covering. Why do I say that? Because, data indicates it. You have 12,000 short positions by the FIIs covered in index futures, and they also unwound about 2,000 longs. So what happened is that FII's longs, which are close to around 59% at the start of the previous week, 77% at the start of the series, had fallen to 44% going into yesterday's trading session, and 3% of those positions have been covered. So the FII longs have inched higher to 47%. Mind you, they're still net short to the tune of 53%. In index options, before yesterday's trading session, after the big fall that we saw on Friday, the FIIs went ahead and wrote 1.5 call contracts. Yesterday, with the market moving higher, those short call writers had to cover their positions, so 62,000 call contracts were unwound. At the same time, we saw writing of 1.3 lakh puts, and put writing is usually, what gives people comfort that there is support at the lower levels. Look at the 18,000 call, for instance. With Nifty conquering that 18,000 mark, we had 18.5 lakh contracts unwound out there, with 75 lakh contracts still outstanding. So if the market sustains today's opening, then we see some more short covering in this level as well. 18,100 call writers also felt the heat a bit, covered some positions. But put writers were extremely active at 17,800, 17,900 and 18,000. So all of this tells you that we may see support. However, that's where things end, because yesterday from the highs as well, towards the end, we saw some bit of correction from the top on both the Nifty as well as the Nifty Bank. And even with a big move in the market on the way up, we didn't see a big decline in the India VIX. So that's telling you that volatility is still the name of the game. So what are the levels that you're looking at? The Nifty conquered the 100-day moving average, like Sonia said, 17,850 on the way up. So that will be an important support. But are we seeing some resistance around that, 50-day moving average of 18,200 once we cross yesterday's high, and if we cross yesterday's high? On the Nifty Bank, the 50-day moving average was conquered yesterday. The next level to watch out for on the way up will be 43,200. So, yes, a lot of shorts covered. Yes, a firm base formed. Where do we go from here?
Okay, one good part, of course, is that the COVID fears are now receding globally, right? China has decided to end COVID quarantine for all foreign arrivals. Whether people choose to travel to China is a different thing, but they have ended COVID quarantine, and global commodities have rebounded on account of that. So at least that's one hurdle out of the way. But before we move ahead and start the show, let me tell you what's lined up in the first hour of the show today. We'll get you updates from the markets across the globe.